Alright, guys, so this is a very serious topic today, and we must talk about the credit card crisis in the United States because wherever you are, it ultimately affects you as well. And if you're an American, it definitely affects your economic future going forward. Now, there are a lot of assumptions when we hear the phrase a growing economy. People think it's the strength of the US consumer, people are earning more, so they are spending more. And if you look at all the reports from the mainstream media, it's easy to see a bit of roses. Headline from Bloomberg: growth in consumer spending was marked up to 3.7%, the fastest since early 2023. And with a report like that, it's hard to argue that the economy is failing. And more reports keep rolling in telling us that the economy is really robust. There's nothing to see here. People will keep spending, the markets will keep melting up, and everything is boomtown Charlie. From McKinsey, now this is one of the top consulting firms in the world. US consumer optimism has reached the highest level since the 2020 pandemic. Can you imagine that? They surveyed thousands of people, and 47% of respondents said they were optimistic. The economy is doing great and they're excited to spend more. So it really isn't your fault if you seem to be living in two separate worlds. The media tells you that everything is fine and dandy, but when you look at your bank balance or your checking account, it's a completely different story. We are witnessing inflation attacking our wealth, our savings, and our salaries. If the price of food goes up by 10%, but your paycheck has grown only by 5, are you really keeping up? And let's have a reality check here. US credit card defaults have jumped to the highest level since 2010, and that's a 14-year record broken. It's astounding. So you're telling me that households are swiping even more today than the 2020 lockdowns that lasted for years? That we are back to a level of desperation just after the '08 housing collapse? Now, the amount of US credit card defaults has exploded. Credit lenders wrote off an incredible $46 billion in delinquent loan balances in the first 9 months of 2024. This is up by 50% in the same period the year before. So people are poorer today than in 2023. And this is the effect of higher inflation plus higher interest rates ravaging the economy. And we can see the progression here. Ever since the Fed took rates up in 2021, defaults have grown progressively worse, especially when inflation just refuses to come down fast enough. And something tells me that a disaster is brewing in 2025. So this is going to feed deeper into the class divide already occurring in the United States. Now it's a playbook for what's going to happen globally as well given enough time. Now there's a shocking number that I want to share with you. The number is 35% of the average American paycheck goes to debt, and that includes your mortgage and car payments. And according to Bank of America, 35% of households earning 50 grand are living paycheck to paycheck, and that's 3% higher than in 2019. It's even crazier when you realize that 20% of households making more than $150,000 are in the same situation. All these six-figure earners can't even save money. Now, I know what you might be thinking: people should stop buying everything except food and gas. But let's not forget utilities, your insurance costs, and rent. Now, those are big ticket payments that can whittle down your paycheck to nothing. And to survive, we are seeing more people swipe their credit cards to buy food. Yes, you heard me right, the dependency on plastic has gone ballistic. It really shows you how dire consumers have become. Now, the Urban Institute did a study on how many families take on debt to pay for groceries. And I want to share the findings. It is disturbing on both a personal and financial level because this situation can always happen to us if life takes a wrong turn somewhere down the road. Now, over 60% of families pay for their groceries with a credit card. Less than 6% get their groceries using buy now, pay later options or even payday loans. By itself, this looks really innocuous. I buy groceries using credit cards from time to time. But let's dig in a little further. More than a quarter of credit card users aren't paying in full. 20% met the minimum payment on their cards, but over 7% can't even afford that. So there's a illusion of strength in the US economy. Even the basics are being propped up by credit card borrowing. And that's the aftermath of the Biden economy. 3 years of higher rates and inflation. they've simply crushed family spending. So there is a serious crisis brewing in the United States, and when we step back and look at things from the macro level, the situation is only going to get worse in the coming months. Now, let me ask you a trick question. Will interest rates fall? Well, the Federal Reserve has hinted that rate cuts will be coming. Rates in the US would be dropping ultimately down. Now, in the latest FOMC meeting, the Fed gave us a projection of interest rates over the next few years. By the end of 2025, rates will settle below 4%, down by 50 basis points, and by 2027, we would be near 3%, and that's coming in 2 years. But will that impact credit card borrowing rates? Well, not really, because the Federal Reserve can only affect the short end of the curve. Short term bonds is the trick question here. But it is the free market that dictates the real cost of borrowing in the US economy. And what have we been seeing lately? Long term yields across the board has gone up. In just 3 months, borrowing costs have jumped on average a full percentage point. Now, in September, which is the blue line, the 10-year was just 3.6%. Today, it's well above 4.5%, which is a big jump. The 10-year sets the benchmark for all borrowing costs in the US, and that includes your mortgage rate, personal loans, and yes, credit card rates as well. And as the US continues to borrow even more money in 2025, this puts incredible pressure on a bond market that's at the breaking point. So, from a macro point of view, it's not looking rosy here. And that's why I've said multiple times on this channel the only way to survive is to constantly accumulate assets. And what choice do we really have, right? It's not really about your assets appreciating, it's more about the currency, the dollar, losing value. And if you're hoarding cash or you're spending recklessly, well, you're going to become a statistic down the line, and I don't want that for anyone here. According to the FT, US consumers who didn't fully pay off their credit card bills just made Wall Street richer. They paid a staggering $170 billion in interest payments alone. That's just 12 months from September 2023. This is insane. And as we mentioned before, rates aren't going to drop. Consumers waiting for relief will have to wait for years. Survival from now to then isn't guaranteed. So how does this affect you? Now, on the personal finance side, it's simple and we all know the basics, right? Don't get into debt, live within your means, and always pay off your credit card debt down. But as an investor, it gets quite complicated here. Does this mean corporate earnings will collapse? Now, wait a minute. Wall Street is getting richer means Main Street will benefit too, right? And it's even messier when we remember what Trump has promised to do in 2025.
And while working Americans catch up, we're going to put a temporary cap on credit card interest rates at 10%. We have no choice. They're getting 22, 25%. We can't let people have to pay 25% and 22% interest because they can't afford to pay off.
So Trump wants to bring credit card rates down to 10%. Now in the US, the average rate is between 23 to 25%. Trump wants to cut that down by more than half. Personally, I love the idea, right? I don't like it when Wall Street banks they profit from the man on the street, but there are economic realities we have to live with. Now, if Trump manages to get this through, issuers they're going to revolt because the credit card business is inherently risky and it's worse thanks to inflation. And here's the problem banks are facing. Credit card defaults are up 50% year over year. That's bad enough. But the defaults of serious delinquencies have more than doubled over the last 24 months. Your customer base is screaming that they just don't have enough money to pay their debt. The credit card business isn't that complex. You loan out cash, you charge an interest rate, and you hope and pray to get paid back. And that's how you basically make money. But that depends on your customers remaining solvent enough to pay you back. And lower income Americans, they're on their last legs. According to Moody's, the bottom third of US consumers, they are tapped out. Their savings rate is effectively zero. So no savings means swiping the plastic more to buy everything. It is not a sustainable situation, and that would affect the economy as a whole. And this is the consequence of the inflation crisis. Now, I've gone through periods in my life where getting just food was difficult. Now, I'm thankful to have avoided rock bottom, but it's not really rosy for many people around. Even the middle class, they're getting squeezed. People who never had this problem before are facing a world where every dollar is buying less at a very alarming rate.
The cost of living is quadrupled. Just to get groceries has now costed me a second mortgage. Let's be serious. I have 8 people to feed in my house. It's literally between $1,200 to $1,400 a month just to have groceries in my house. Last couple years I've had to get credit cards just to get by certain things, school clothes or certain Christmas. Let's talk about that. Extra added expenses when I'm already struggling. My mortgage gets paid every month, but it's not at the first of the month. It's definitely at the end of the month. I mean, my bills are getting paid, but I'm falling behind every single day because I have to pick and choose which bills to go behind on so I have groceries in my house.
So the US economy is getting squeezed, and there are only a few ways this can get played out, guys. This leaves us with major questions still unanswered. Will the coming trade war hammer US consumers further? And if everything is made in America, sure, some jobs might come back. But what's almost guaranteed is higher prices for consumer products. Everything in Walmart would start flying to the moon. And here are the biggest retail closures in the US in 2024. And take a moment to pause this video and look through the brands. You have Big Lots, Walgreens, and Macy's on the list. Brands that everyone knows and probably been to many times. And these closures are 69% higher than the year before. And this leaves the Trump White House in a bind. Either the US economy has to ease or company earnings could be hammered in 2025. Now, I'm leaning more towards further deficit spending to keep things propped up. Now, I don't believe Trump will allow corporate earnings to collapse without a fight. A market crash is not guaranteed, but what's baked into the cake is an inflationary future going forward. Your dollars are officially under attack. Now, going forward, I'm going to make more content and videos like this to really remind us of what's coming ahead. We have to hedge ourselves against this because even if we have a crash tomorrow, if everything collapses next week, in the decades ahead, prices of almost everything are going to soar higher. But let me know what you think. How bad is consumer spending today? And are you personally swiping on credit cards like never before? Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.